We love people. I think we got a pretty good swath of America covered today. We have Christy in Raleigh. I'm in New York. Skye is in Northern California. Kristin's in Southern California. So uh hopefully a good like coverage of understanding what's going on with affordability and stuff. Skye, you're in Marin, right?
I am. Yes, we've got everyone surrounded here. We've got north, south, east, and west.
So I was talking to you yesterday. You grew up in the 707, or why do you have that area code?
Yeah, I did. And I think like we all have whatever phone number was a cell phone number we had in 2005 or whenever the cell phone companies stopped charging for long distance, right? Then you stopped changing your number when you moved. So that just happened to be where I was living at the time. And of course, there's been no need to change that number over the last 20 years.
There we go. Well, welcome everybody that's joined so far. This is Mortgages with Millennials. I'm Robbie Chrisman. I would say there's Kristin Messerli, but she's in the middle of a meeting with MBA to get them to partner on a financial literacy campaign. So she should be on in 15 minutes though. We're very pleased today to be joined by Christy Beck, who's Corporate Director of Sales and Marketing for Caruso Homes and the current president of the Raleigh-Wake County Home Builders Association, which is one of the largest home builder associations in the country, and Skye Laudari, who's CEO and co-founder of Crib Equity, which is doing some really interesting things on to help people get into homes. And a quick thank you to the Mortgage Collaborative for sponsoring today's show. For those of you that are not yet members, their member network is comprised of independent mortgage banking companies, banks, credit unions, and mortgage service providers, all working together to improve their businesses and the mortgage industry. For those of you that are here, chime in with questions in the chat, comments in the chat. We'd love to hear it. We have any like viewers from New York, like hang up on see if you can find me in Central Park. It'd be cool. Meet some of you in person. We got to have some fans out there, Mortgages with Millennials, right? Some rabid fans. Uh, Anyways, Christy, how are you doing today?
Thanks. How are you doing? Obviously, very nice sitting in the background where you are.
It's a little chilly, and actually, I wanted to, we're not trying to do a full striptease here, but it is New York City. It is playoff time in our New York Knicks shirt. We're going to the game at Madison Square Garden tonight. We'll see how long I can make it without a sweatshirt out here. Spring came and then went. You've probably gone through the same thing down in Raleigh.
Yeah.
Skye, how you doing, man?
I'm doing great. It's a pleasure to be here. Thanks for having me.
Awesome. Let's go through a couple questions before Kristin rejoins, and I want to get more perspective on what both your companies are doing. We'll go alphabetically. Christy, let's start with you, and I want to talk Caruso Homes first before we get into the Home Builders Association. But can you give people a little overview of Caruso Homes and what you're doing, what you specialize in?
Sure. We're a private home builder based out of Maryland, and we build on the East Coast in Delaware, Pennsylvania, Maryland, Virginia, and into North Carolina, Charlotte, and Raleigh. I've been with the company for 7 years and had various positions within the company, and I'm currently corporate vice president of sales and marketing for the company. So I handle all the sales and marketing across the from top to bottom, if you will. And we have two different models of home building. We do production, your typical production neighborhoods where you have a model home and you buy the neighborhood and develop it, or buy finished lots and someone comes in and buys a home within that neighborhood. We also have a platform called On Your Lot. So we will build your house, build our home on your lot. We will also help you find a lot if needed. And we partner with real estate agents specifically in marketing their lots with them in order to get our name out there in the marketplace. So we'll build about 480 homes this year. And like I said, all the way down the East Coast, and we tend to be move up and some empty nester buyers. We do have we're introducing a new arm of our company called Reward Homes, which will be the more affordable, more attainable homes that we are in search of land to build the Reward Homes communities as well, which we're really excited about. A much more attainable rather than the 6s, 7s, and 8s price range. So a lot going on.
And I was gonna say, if that wasn't enough, you're also president of the Raleigh-Wake County Home Builders Association. What inspired that? Like you didn't have enough on your plate, or like what do you do? Like what inspired it, and what is what's kind of top of mind agenda items? What's going on with the builders?
I have been in home building my entire career, and quite frankly, I don't really know how to do anything else but home building. And so I have always given back to the industry through the local HBA as well as National Association of Home Builders. Becoming president was just something I wanted to get back to my HBA for all that the industry had done for me. Raleigh obviously is a very, very strong market. And it's a great place to be. We have people moving, 67 people move into move in or out of the triangle. That includes net, including, death and moving out of the market. 67 new people coming to Raleigh every day. So it's a booming market. And of course, with the announcement of Apple and Google, it's going to do anything but continue to grow outward. Now, I'm president of the Raleigh-Wake County HBA, but the whole MSA is pretty much one big area where people are moving in and out of. So,
yeah, I do want to talk more about Raleigh in a second, but Skye, let me bring you in here. You talk about the vision for founding Crib Equity. You're the CEO and co-founder. What does it do, and why do you feel like it's filling such an important need currently?
Yeah, thanks. So yeah, Crib Equity is really focused on creating more affordable access to home ownership. You could think of us maybe as an easy way to consider it would be the rich parents or the rich uncle for the majority of folks that don't have one, right? And so what I mean by that is that we can, through our platform, facilitate a co-investment into the down payment or into the funds to close in conjunction with a home buyer in order for them to create a more accessible home purchase. And a lot of times, I think what we have realized is that down payment is the direct barrier, the biggest barrier to purchase, or sort of indirectly, it is the biggest barrier because a lack of equity or lack of funds to put down creates now a principal amount that is frankly too much for most folks to finance relative to their income, with where home prices have gone and where interest rates have gone. And so really that equity investment, that down payment becomes the limiting factor for most folks that aren't able to attain home ownership. We are able to double the down payment, inclusive of closing costs for home buyers, and in some cases even potentially do a bit more than that, up to 2/3 in some cases. So really actually moving the needle for buyers is not a down payment assistance of to cover closing costs. We're able to put up to hundreds of thousands of dollars into a home in order to make it more affordable for that home buyer. So part of it was a recognition of my own personal experience. You mentioned I'm in Northern California now. I was here for a while trying to buy a home with my wife for several years, and unsuccessfully, in large part due to that upfront cost of entry. And so we moved to Seattle. We used 1,000 miles of geography as our arbitrage into the real estate market because Crib Equity didn't exist yet. And it was only by getting into that less expensive home in Washington State that we were able to accumulate equity that then we used to move back to California. And so I think when we consider that in terms of like, there's a couple different personas that we could serve, but in our case, we can, in our own personal experience, like we could have enabled a home purchase here in California, and Crib Equity in general can help that average home buyer, cut their savings time down from 9 years to 3 years, for example, to save an average 10% down. And then over that same 9 years, they would leave with double the net worth as if they had waited to buy on their own. So there's a huge economic advantage that we can create for home buyers by getting them into home ownership and beginning to allow them to vest that home equity.
Very well put. And I do want to talk affordability today. That's kind of our main focus in having both of you on. And for more context for listeners, it's like housing is all out of whack right now. Normally, real estate is cyclical. Typically, when mortgage rates shoot up, sales decline, home prices fall, and eventually, because home prices fall, sales return. But none of that's really happening right now. I mean, obviously, a big factor is this lack of inventory that's keeping home prices elevated. There's also high rates. And so I want to ask each of you, Chris, you first. I mean, everyone knows affordability is a challenge for potential home buyers right now. kind of diving a little deeper than rates are high and inventory is limited, what are some factors that you're seeing from your side of things that are driving affordability challenges?
Oh, as a home builder, obviously the first would be land cost. Land costs have skyrocketed and continue to go up. As with the same thing you just said, it's out of whack based on what's happening. So land is one start. Governmental jurisdiction, municipalities is can also be a challenge, which adds cost to building homes in certain areas of the country. California probably is one of those places, you know. So we have that, and then the cost of building has somewhat plateaued. However, we have recently seen some increase in certain materials, but overall that's plateaued, but it's still high. So you know, in paying premium for land and development of the land, and then the materials to build the home, and of course the shortage of labor, you throw that in there, and with the shortage of labor, you're paying premiums for all your mechanical, plumbing, electricians. They're if I could do it over again, I might go be an HVAC contractor. There are just not enough of them. So labor is the other side of it. So from every angle, we can't build them fast enough, but yet we can't build them fast enough, if that makes sense. We can't build them to even make a dent in the lack of supply, but we also can't build them fast enough due to all the constraints that builders are faced with, and finding ways to to get around them.
As Skye, we talked a little bit on the phone yesterday, so I have an idea where you're going to go with this, but one takeaway that I had from my call with you was it's like down payment is still the problem. The down payment problem is dead, but long live the down payment problem. What's your thoughts on lack of affordability?
Yeah, well, first, thank you, Christy, for everything you're doing to increase supply, right? 480 homes will, is we need all of the supply we can get, right? And I think there's a lot of different solutions that will come together to get us out of this housing crunch. I don't think any one solution is going to be a panacea and sufficient to solve, sort of what seems like an intractable problem that we have. And so obviously supply is a big issue, is keeping home prices up. In terms of the comment that you were just making, Robbie, with the down payment, I think when we sort of look historically, maybe 10 or 15 years ago, down payment really was the blocker because there were not mortgage products available for you without that down payment. There have been more proliferation of mortgage products that allow for the 2, 3, 5% down type products. The problem today is that with how home prices and the appreciation there, and then interest rates increasing, no one can afford to finance 95% of their home. That's just a payment that can't be carried anymore by the average home buyer. And I think one of the things when we talk about affordability too is, like, if you go back a few decades, 40 years ago, the average home was a little over 3 times the average American household income. Now it's almost 7 times, right? So when you sort of chart those two graphs, the area underneath the graph, those are diverging lines. And so I think that creates a really difficult situation for folks to overcome. And it's particularly difficult, aptly for this conversation and for millennials, is that, those entering into the housing market now are at a huge disadvantage relative to those who have been in the market for some time. And so, I think I just saw a stat this week. There was a Wall Street Journal article that was accounting for the fact that Americans over 55 years old now have over 70% of the wealth in the US, whereas, 2 or 3 decades ago, that was about 50%, right? And so there is this run up in home equity. There's a run up in the stock market, but only the people who have been in that long enough and who have already had that ownership, whether it be in, equities or in their home, are really experiencing the benefit of that. And those that don't own a home already are facing, strong headwinds to get into that, into that group.
And that's a great point. I was going to add that we talk lack of inventory as this major factor that's keeping home prices elevated. But one should also take into consideration kind of this extreme inflation of the money supply that we've seen during the Fed's latest bout of quantitative easing. And the dollar's value in relation to single family homes has dropped almost precipitously in the last 4 or 5 years. And I guess since the end of 2019, using median sales price, I did a little research before today's call. The dollar's purchasing power versus an existing home has dropped 45% and is down 22% compared to that of a new home. So another way of saying that, home price, it's, you could say home prices rose, but maybe more accurately and closer to the heart of the matter would be to say the dollar's value has fallen. And it's almost become the plight of this younger generation. Housing has become this huge plight. Maybe it's driving other unrest in the minds of young people. We see all these protests on campus, and it's like millennials and Gen Z are going through this existential crisis of like, I can't afford a home. What am I going to do? Am I going to be renting for forever? There's kind of this widespread perception that unaffordable housing costs are driving a lot of this dysfunction in younger people. And I mean, we're becoming more and more focused on housing. It's like everything is connected to it. Our financial system, various laws and regulations, tax breaks, et cetera, et cetera. Let's talk solutions before I get too riled up here. Christy, I want to go to you first again. What are there creative solutions builders are utilizing to get more people into homes? What are you hearing?
Obviously, rate buy downs are probably the most popular. And inventory, if you've got inventory and affordability, making it affordable and helping buy down the rate is what seems to be working the best. However, when you end up talking to different builders who, I've talked to several of the large guys that are offering the big rate buy downs, they end up saying that the majority of their customers don't end up going that with the buy down rate that the builders invested in. They end up on another path. So that's pretty interesting in itself. But what we're seeing are incentives. Incentives are not going to go anywhere. In my personal opinion, builders were not offering at all for that couple of strange years where we were selling so fast. Now incentives have come back, whether it be towards closing costs, down payment, free options. Those are big to help people get into homes. And then working very closely with lenders. If you don't own, if you're not partners, like, for example, the big guys own their own mortgage companies, but myself, I work with different lenders in every market. It is key to have a ongoing positive relationship with your lenders because they are an extension of you. And if they believe in their builder and you believe in them, it moves the process along so much faster, and it's much, much better for the customer. And even customers are willing to maybe pay even a little bit more to get that ease of, because it's all in some of it's unknown to them. They don't know what they're getting into, depending on if it's the first purchase or not. So I value the relationships that we have with our lenders, and I'm constantly working with the lenders to make sure they understand how we do things and vice versa. So it just streamlines the situation.
Very well put. Kristin, I do want to bring you in 1 second, but let me ask this question to Skye, and then we'll get to you. Skye, creative things that you're seeing out there. Obviously, Crib Equity is doing something very creative, but what?
Yeah.
And you talk about Crib Equity some more, but where's your mind going when it comes to creative solutions?
Well, it's certainly one of the solutions, I think. It won't serve every home buyer, but certainly a large percentage of them, we think there's a good fit. For younger home buyers, I think what we're seeing most often is that there's this segment of, they're being labeled NEPO buyers now, right? Home buyers that are taking family money in order to buy a home. And what we've seen is that as an absolute number, it's not necessarily increasing, but as a market share, it is increasing of younger buyers because the buyers that don't have that support are basically leaving the market, right? And ultimately what that happens is now, specifically for millennials, as an entire generation, we're behind, Gen X and baby boomers from wealth creation at every age. But the disparity between the top 10% of millennials and the other 90% is wider than any of the prior generations also. And the biggest contributor to that is home ownership. And so it's these folks that can get into home ownership and oftentimes do it because they have the family money to make that purchase. So not only do they get into home ownership, but they're getting it on better terms because their payments are lower and they're able to accumulate and save and do all those things with a leg up even further on those that are unable to buy. And so, certainly that access to capital is one solution that is being employed. We think we're an alternative to that for the folks that don't have the family money directly. I think there's also a lot of other new alternative flexible financing solutions that are emerging. There's programs like or companies like Ownify, or I think Nestman. I think you guys have talked to Niles. There are some creative ways to get into the market, whether it's your home or a shared home or an investment home, to begin to grow equity in the real estate market, whether or not it's your primary residence. And then obviously there are various rent to own solutions as well. I think the thing with a lot of these models, if you are the home buyer, what you really have to look at is where are the incentives, right? And so with some of these programs, you need to be cautious, at least from my perspective, because the program, if the business does better, if you don't succeed as the home buyer or the renter, you need to be cautious of that, right? And I think ultimately what you want, if you are going to be a homeowner looking at one of these newer solutions, is does my outcome, does my success, is that also someone else's success, or is my failure their success, right? And those things I think will sort of net out over time as more people go through the process and really understand how those products can work. But I think those solutions do exist, and they are emerging, and there are many different flavors of it. So we're not necessarily going to be able to help someone who has no money to put down, right? Where a rent to own could step in. But if you have 5% or you have 10%, we can really move the needle for you. So I think along that whole spectrum, there are going to be a number of opportunities for folks to get into housing, either immediately or transition into ownership if that's something that they want to do over time.
Awesome. Kristin, welcome. How you doing?
Thanks. Hi, everybody. I'm so sorry to be late. I got my calendars mixed up, but had a meeting with the MBA, partnering with them on a financial literacy campaign and initiative. So for all of the First Home IQ followers or financial literacy advocates, which I'm sure lots of you are that, really excited about what's coming around that, and appreciate you guys letting me join you late. But it sounds like the conversation has gotten rolling, and I'm sorry I missed some of it, but I did want to hop in with a little bit of research related to what Skye's talking about. Robbie, you cool with that?
Yeah, totally. And just to bring you up to speed, so we went through Caruso Homes and crib equity. We talked about some of the affordability challenges out there, and the most recent thing was kind of creative solutions. So hop on into the research.
Thank you. Great. Okay, I was just gonna guess and hope I asked questions that were relevant. Okay, so I was just thinking, well, Skye, because I met Skye at a conference recently, and he was sharing some of that he was just talking about. And we started talking about this wealth gap within the millennial generation. And I think, this I haven't updated in a couple of years. So just, today was a couple years ago. But I wanted to just run through a couple points, and then, if you guys have any additional thoughts on this, but whenever I adjusted everything for inflation, when you look at the today numbers in a couple of different areas, but you look at, median home price, and comparatively adjusted for inflation, it's still so significantly higher than it was, in 1980. And so you think about having conversations with parents of millennials or, previous generations, we really need to adjust the way we're talking about affordability. Like, this is a real challenge today. And if you look at median family income, but one of the things I wanted to bring up specifically was looking at the student loan debt. We brought in, an expert in this area recently, but student loan debt for bachelors, $13,000 in 1980 versus $39,000 today. And then you look at the racial wealth gap, and 84% of millennial homebuyers are white. The median homebuyer income of a homebuyer is $100,000. It's 54% higher than the median income of Black millennials. So there is a huge racial wealth gap. And you think about systemically and historically where that's coming from. I mean, there's just, if you think about the Nepo buyer, that's just not there within communities of color specifically. So homeownership rate within whites versus Blacks, median income, and then look at the parental median wealth. So where that money would be coming from to put down on a home, $84,000 from white families who are, have been able to experience homeownership from day one, compared with Black families having $15,000 versus $84,000. So just, I wanted to bring that up because I feel like, as we're looking at especially changing demographics and trying to support more millennial homebuyers getting into homes, they're not going to have, have that kind of family wealth to tap into, or many times the wealth from homeownership. So looking at other alternative ways, and which is why I was super interested in what Crib Equity was doing, and of course what Niles at Nestment had been doing, and some different alternative ways of getting into homes. Any thoughts on that, Skye? I know that we had talked about that a little bit.
Yeah, I mean, the numbers actually there were a little bit more stark than I was expecting, but they're along the same trend that we've, that we see and that we reference. And I think it goes to one of the things I often say is, the folks that can benefit the most from the wealth creation opportunity of homeownership are unfortunately the ones that are locked out of it, right? And so that is where we need ways to get people into homes that are not already homeowners, that don't have that familial wealth, that don't have the generational wealth, because it is the vehicle for them to create that going forward. And it's not surprising, right? I mean, for the average American, their home is the largest asset that they'll own and the greatest creator of wealth, because it is also one of the only leveraged investment vehicles that the average consumer can enter into. Right? They don't have, I don't have access to, a lot of LBO funds through, hedge funds that will take my, incremental $10 at a time, right? So, I think for the average consumer, this is the place where you get that opportunity, and being able to provide sort of that wedge and that opportunity to become a homeowner creates the ability to level up from there to the next home. It creates the opportunity to then pass that down to your family, and to your children. And I think that really is what we aim to be able to enable. I often say, like, the only way to afford to buy a home today is to already own one. And that is a very difficult thing for millennial home buyers or for younger home buyers, because many of them are not homeowners today.
Mm-hmm.
Kristin, I have a question for
no,
Kristy, if that's okay to jump in.
Yes, please.
Cool. Kristy, I kind of want to demystify some of the misconceptions around building. Currently, it seems like people are putting a excess blame on builders. Oh, builders are building below their historical averages. Oh, not enough homes are coming to market. You mentioned some challenges, the cost of land being one. Is it regulation that's going to help builders build more? Are there government subsidies? Like, what are some solutions to builders getting back toward those historical averages?
I think, a lot of builders right now are very cautious. Some are full force buying land, and talking to different builders, but some are kind of holding off, seeing what the market's going to do. It's been so volatile the last 4 or 5 years that it's like, okay, so am I going to wake up tomorrow and it's going to be exactly opposite of what it was yesterday? But I do think, and I know from my involvement at NAHB, that they're spending a ton of time working with the federal government, trying to open doors for releasing the housing, how we can work together for the housing shortage, how we can make it more fruitful for builders to less jurisdictional problems, that sort of thing. So make it fruitful for builders to be able to turn land, get it ready for housing faster and sooner to get it to the market. In many cases, 25 to 30% of the cost is land, and that's pretty substantial. So if we can knock some of that back with taking away some of what we have to do to get it buildable ready, I mean, that's a help right there. I do know, and I would tell everybody on here to pay attention to the and I know mortgage industry probably has their group as well, but constantly trying to get in front of our local, even local national folks to say housing is the answer to some of this. If you'll just give us the support we need. You know, it's the whole American dream of owning a home, but it's going to take a lot of effort from a lot of people to get it. I mean, for example, Raleigh has 1 month of inventory, 1 month. 30 days, and it fluctuates back and forth. How do you ever get beyond that? Like you said, it's not going to be easy. It's going to have to be a lot of people putting their heads together, figuring out what the next step is to loosen restrictions for builders. And listen, people say, you know, we hear all the time, well, you're just greedy. No, we're not. Our goal is to build communities and build homes for people, but we're not for profit. So, you know, we do have to support our families that work for us and so forth. But, you know, there's a long road ahead of us where we could hope to see some changes in home building to make it easier for builders to deliver homes faster and more attainably.
I mean, there's so much talk during the pandemic of lumber prices have skyrocketed. Are building materials still very elevated and continuing to rise? Have those come back down? I wouldn't assume that labor costs have come down much because there's been kind of this wage inflation spiral that's gone on with some stuff. But in terms of the actual building materials outside of land, what's been going on there?
It's pretty well flattened out. There's definitely been some significant drop in lumber. And it hasn't shot back up. Some things stayed, you know, some of the prices stayed where they were, and builders just adjusted to, you know, an alternate source. And, you know, builders are constantly tweaking what they offer in their homes in order to maintain some attainability of pricing. So there's always that challenge, but for the most part, materials are leveled off, and it's the labor that's the cost. I mean, you pay a premium.
Very well. But Skye, question for you. You know, my dad texted me during the show and he goes, "Oh, it's nice to be from a family of savers, huh?" Which is a little arrogant, but for the people that don't come from families that can help them out, and it is nice to be a Nepo baby, I guess, in that sense. What's your advice for people that want to get into home ownership?
Well, I think you go talk to Kristin. You're absolutely right, because I think there is, financial literacy was not a conversation that I had around the dinner table as a kid growing up, right? It was not a topic of conversation in our family. And I think there's a lot of benefit much earlier than millennials now, right? In terms of teaching, younger generations how to manage money, what opportunities exists in order to, make the most of what you're earning and what you're saving, what you're investing, and to think about those things, because it really is going to get you ahead. And so I had to teach myself, a lot of those things, as I reached adulthood. That piece of the family, it wasn't just the money being passed down from one generation to the next. It's oftentimes that knowledge, right? And if it's not the knowledge, it's just the understanding, the expectation, the belief that those things are possible, the planning for them, right? If your parents never owned a home, are you going to set out and think, oh, well, that owning a home is something I'm going to do, right? I think in some ways, I don't know the numbers exactly, but I would imagine it follows a similar distribution curve to, like college education. If your parents went to college, there's a high likelihood that your children will go to college, right? It's just a norm within that family and within that culture. And so I think that the education that can be provided by parents and, by others in the community to would-be home buyers is in some cases probably just as advantageous as actual dollars to invest in the home. So, financial literacy programs, homeowner programs, and then helping people to understand what's available to them, right? I mean, I think for a long time, there's this idea that a 20% down payment is an entry point into the market. And obviously there are ways to get into a home before you reach that point today. There's many different loan products. Obviously, you're going to incur MI on a lot of those if you don't, but it may still work out for you. You might be able to use a product like Crib Equity that is a credit enhancement that would reduce the cost of home ownership, in place of like an MI. But there are there are ways in which we can help people understand what is, what is available to them, and then how to utilize their resources most effectively.
It might be interesting at some point to come up with a list from the community and from, guests like yourself that people can reference for strategies to address the affordability challenge, and financial literacy challenge. But I think that is such a huge, there's like little products here and there. There's little, solutions that are coming up like your own. And I want to make sure people know about those, because it does feel like, especially for millennials, and Skye, I don't know if you shared a little bit about your story, but there's so much that we are just the mindset issue you're bringing up. Like there's just a general feeling that homeownership is out of reach for this generation. And we need to, as industry professionals, be able to share another message, and so, for all who are in the chat, who are, on this call, would love for your input on that as well, as we think about like, what are some of the solutions. I'd love to address there was a question around, from Brad, do you have any data on the spending habits of millennials in relation to this conversation? There's a lot of financial literacy, data out there showing that this is a major gap. And I think Skye was bringing up a good point around not just financial literacy, but the mindset and culture from which someone is coming into the conversation. But I do have a few data points I'll share real quick that can speak to that. This is coming from the 2024 Next Gen Homebuyer Report, which we published a couple of months ago. 1,000 millennial and Gen Z consumers that we surveyed from across the country. And what I was really interested in was the fact that there were some good financial habits, actually. We found that 70% of Next Gen, meaning millennials and Gen Z, said that they've checked their credit in the past 6 months. We found that they are tracking their expenses, they're working on emergency savings, they're saving for retirement, but they're also hyper stressed about their finances and not quite making ends meet. So some of the big challenges, no surprise, high cost of living. Let's see. One of the things I wanted to bring up, though, that only 28% had zero debt. So debt is definitely, a challenge. And I think there's a financial literacy component to that, of like understanding how much debt you can have, what a debt to income ratio is. And then, credit card debt came up really high. I think, we hit an all-time high. Can't remember what the number was of credit card debt this last year, but credit card debt is significantly high. Oh, and actually, I had brought up some of the data around like one of the big barriers to saving for a down payment, and credit card debt came up in the top 4 barriers, or top 3 barriers to saving for a down payment. So anyway, those are some of the challenges. When it came to financial literacy, over half said that they're confident in their knowledge of buying a home. I did a whole other financial literacy survey that was talking about measuring their understanding of buying their first home in 20 questions. And you all can take the quiz if you haven't at firsthomeIQ.com. Get my score, but it's the average score there is like 57%. So half may feel confident in their knowledge of buying a home, but there's a lot of discrepancy when it comes to actually knowing what it takes to buy a home. And I'm sure, I see Christy laughing, because I think a lot of people think they might know and they don't. But anyway, just wanted to address Brad's comments there. And I think we have some good conversation going in chat. Robbie,
Kristin,
anything else?
I have a question for you, Kristin. Anecdotally, at least, do you have any stories about how discussing financial literacy or engaging in it at a younger age leads to better outcomes later on, or kind of speak to the importance of it?
Yeah, so there is a really fascinating data point we gathered in 2022, I think it was 2021. It was about, we were asking whether they learned about creating a financial plan or financial planning as children. And it was the only question we dug really deep into, your past. And it was kind of like a throwaway question, but why not? anyway, one of the really interesting things that came out of that was that we realized there was a giant gap between men and women in answering that question. Female millennials grew up significantly less likely to have learned about financial planning. And it was the only, so we saw a big gender gap when it came to their financial habits. Like men were much more likely to be investing in the stock market. They were more likely to be saving for retirement. And, just kind of across the board, you could see like all these different habits. And we tried to control for income. We controlled for income. We controlled for even their parents' income. So socioeconomic status. We controlled for whether they had children, their marital status. Nothing mattered except for that first question. And then we saw a statistically significant change. And that was the question that made a difference, was whether or not they grew up learning about making a financial plan. And then that brought some equality to that question. So it just goes to show that it really does matter if you're growing up, whether that's learning or just the mindset that, hey, I am going to, and I know for me personally, like that was really important for me to come into that mindset of like, I'm going to be taking care of my finances. I'm going to be empowered to make these smart decisions. And I think so, that cultural component plays a big factor there.
Mhm.
Very
Yeah,
well. So we only have a couple more minutes here. Skye, unless you have a comment, Skye, quickly.
Oh, no. Well, just a short one. I was going to say, I think to the point about education and teaching younger generations about finances and financial literacy is like, it's like that old saying, right? The best time to plant a tree was 20 years ago. And so in some ways, I think the same is true of the best time to have, sort of start investing your first home equity was also 20 years ago, but the second best time is today, right? And so, beginning these habits, beginning the education, if you would have loved to have started earlier, but you got to start somewhere. And so I think that's the real power, is the compounding nature of it over time.
So I was going to say we only have a couple more minutes here, and I want you two to look into your crystal ball for either the remainder of 2024 or going into 2025 and moving forward. What do we see in terms of home affordability? And I want you to answer it from your own perspective, Christy, from a building side of things, and Skye from kind of this creative product side of things. Christy, you first. What do you see for affordability as we move through the year?
Well, that's a really good question.
$1 billion question.
Yeah, the $1 million question. Do you have a crystal ball you can pass it? I've read different things. I've heard different things in different economic seminars I've been to. I think builders have an advantage in front of them if they have lots on the ground to build houses, and people will buy them. I think the better strategy is trying to offer attainable homes in your market that you're specifically in. I know we personally as a builder have done some adjusting to try to meet a more affordable product as far as our delivery of homes in certain areas. That's a tough question. I would like to say I think it's going to kind of stay status quo and keep going. And, a lot of people say 28 is going to be a really, really good year. I don't know what crystal ball they have. But between 24, 25, 26, we're going to kind of hop around like we have been. And I think that may just be someone throwing spaghetti. I wish I could give you a better answer, but I think builders are going to try to continue to buy land. I think cautious is going to be a big word. Everybody is hoping that land will level off so that we can, deliver more attainable housing. We use the word attainable rather than affordable, because affordable in one market is so different in another market. So we like to call it attainable. But I know builders are searching for ways to meet more affordability in the market, whether it be going further out. We're starting to see more developments further out. Builders working together. I wish I had my crystal ball, but I think it's going to kind of be status quo for the rest of the year.
You're good. And I'll tell you that now, though, Chris, I'm not going to incorporate wait for 28 into my lexicon as a slogan. I'm not. Fortunately, I think in the most recent new home sales report, new home sales are at the highest monthly clip since a couple years ago. So it seems like it's picking
They
up
are.
a little, which is good.
But
That's good.
starts are down. Starts are down.
We'll get there. Well, hopefully permits are up. Permits are up.
Permits are up, starts are down. So it's
Yeah. Well,
Yeah.
Skye, your thoughts before we get out of here?
Yeah, I like this idea of 2028, like being here in Northern California. I'm thinking of like vintages, right? It's like what's going to be a good season, right? Just for wine and for housing. No, I think for the rest of this year, I mean, I wish that we could project some dramatic changes. I think I'd have to agree with Christy that there's probably not going to be a dramatic or a seismic shift. I think the expectation is that rates are not going to change substantially from where they are today through the remainder of the year. And I thought there was actually some interesting conversation of that at the Housing Wire event last week to just about the Fed's perspective on the market, and that it's not even just the inflationary numbers they're looking for, but they're looking for a cooling employment and a jobs market, and that we're nowhere near that yet. And so, that is another indicator of where the Fed will head. It doesn't seem likely that there'll be a rate change, at least downward before the end of the year. I think the other thing we're really looking at is, what's happening with some of the, the NAR settlement and what's going to happen with in the realtor environment and what impact that will have on housing prices and transaction volume, if any. I think it'll be a slow rollout. But unfortunately, my view is generally that that's going to negatively impact first-time home buyers and buyers that are at the more attainable price points. I like that term too. And so, the folks that don't have as much capital are going to be the ones that are constrained on the types of offers that they can make and where they're going to come up with that money if all of a sudden they're on the hook for either paying their agent or asking for a concession to pay their agent. So, I think there are some dynamics that will change in the market, but broadly, don't expect a whole lot of change from this sort of up and to the right at whatever modest rate we're at right now.
Kristin, any final thoughts before I thank the Mortgage Collaborative here?
Just that I want to thank everybody who has joined and is participating in this conversation. I would love for us to really come together as a community to not just be, having these conversations, but also to share these solutions in our networks. So if you do have any additional thoughts or ideas, or you've heard about, other cool companies that are addressing the attainability and affordability challenge, would love for you to email us. So feel free to send those messages. And again, thank you guys for being here, Skye and Christy.
I appreciate it. It was a great time.
Speaking of collaboration and networks, big thank you to the Mortgage Collaborative for helping make today's show possible. Melissa Langdale, we are very, very appreciative. For those of you that are not members, check them out. I think it's great to be part of a member network where people can collaborate, talk about what's going on and share ideas and those sorts of things. And a big thank you to everybody for joining today. We will see you all at the end of May.
Thanks, everybody.
Take care.
Bye-bye. Thank you.